All right, good morning, everybody. Green on the screen around the world. Hong Kong basically flat, might as well be green. Everybody waiting on the PPI, which looks like it's going to come in a little bit hot. Kind of gets everybody looking back at inflation again, but it's still the dual mandate between jobs and inflation. So want to keep our eye on PPI today. It has the same potential for setup as yesterday's CPI. So we could get another chance for a liquidity gap play. We have so much options structure around the market that if we try to sell off, it gets rejected. If we try to break out, it gets rejected. And we're just holding this zone, holding this range into options expiration. Unless or until that changes, that has to continue to be your base case argument. So every time we get near those lows, expect that we're going to flip and bring it back up. And every time we try to get too high, we're going to flip and bring it back down. No matter how bullish, no matter how bearish, no matter the market sentiment, keep that in mind and you'll do a lot better, right? There's so many examples that I could give where things look like the perfect setup to go long or go short. The market will give you every indicator and every belief and sentiment and signal that it's going to break down and go lower, and then it'll flip and go right back up, or that we're going to break out and go higher and we flip and we go right back down again. So ignore all of those patterns and signals and everything else, and just remember, we are not going anywhere unless something materially changes. Some news that comes out, some key bit of data that makes all of that money that has us trapped in here decide with 2 days left to go that it's going to roll all those options out of the way. Until that happens, play the range. So Europe just talked about another rate cut. They did an economist survey. It's what really is hitting the wire right now. A lot of talk coming out of the ECB. Markets were waiting on this. And now that we've got it, we could see a little bit of a move, but I think the market's going to continue to wait a little bit longer for that PPI to come in. Remember, it's not just about US markets, right? It's everything. So if you look, the NASDAQ has moved the least. Small caps have moved the most in the US. And then we've got Japan, and then we've got Europe. We're going to get more Fed speakers today than the PPI. Then we got Powell at 3 o'clock today. And then we've got Williams after Powell and after the market closes. Now, Finance Juice did a morning briefing. They always do. And it's worth looking at what the morning briefing is on Finance Juice, because they'll often summarize what happened around the world and give you some idea of what's on the table for today. They do a pre-market briefing and they do an aftermarket briefing for the 3 major sessions, US, Asia, and Europe. So every day you want to go in and get the European market wrap. What's nice is Europe isn't closed yet, but they know that we're coming online. We're coming out, getting ready for our trading day. And so they do a Europe market wrap early just for us. So here is Finance Juice. It's free. It doesn't cost you anything, but I highly recommend that you open an account, which also is free. It doesn't cost you anything to open an account. That way you can stay signed in and it will remember your settings. It's a news aggregate website, so it's grabbing news from all over the place. You want a free account so that you can change the settings and eliminate news that you don't want. I don't know about you, but I don't really care what Fox News says or CNN or MSNBC. That's trash. I don't want it. So I eliminate it from my news feed so that I don't see it. I don't want to have to come in every single day and do that. It's nice that it remembers and I got my settings saved. If you have the Pro account, then you can turn the audio on and you can hear the things that they write in here before they write them in here. Sometimes it's as much as 30 seconds to a minute. Other times you'll hear things that they don't write in here at all. So, you know, that way I don't have to sit and stare at this. I can hear the news coming in and I don't have to worry about reading it. Here's the European market wrap. And that's exactly what it's called, right? And they'll do a pre-market for the US, and then they'll do a US market wrap after the end of the day today. That's really useful when you see the US market do something, say, make a really big move, and you're wondering, dang, what the heck was that really big move? And you look everywhere, you can't find it. At the end of the day, come in here, read the aftermarket summary, and see if they know what the heck moved markets today. No guarantee, but a lot of times they'll have a good answer. There's our US session. This is their morning briefing. So Pal is going to be live. Where's he at? All right, well, I didn't get a good answer on where he's at, but it will be live. You never know, right? Sometimes they say there's a speech and it's actually just a recording. So he will be live, and it looks like he will be taking questions and providing insight onto future monetary policy. So this isn't like some luncheon somewhere, apparently. And that's a big deal too, or I should say that's not a big deal, and that's why we want to ask. It's why we want to look. Because sometimes they'll say, oh, he's got a speech, and then he's at, you know, Boy Scouts of America lunch, and there's no way he's going to talk policy. So then it's, you know, well, who cares, right? So if you notice the range that I have built here, I'm still focused on Tuesday's price action because, well, we're still inside of Tuesday's range. We're still inside of Wednesday's range. This puts us in IX10 area. A lot of times we know in advance if today is going to be a range day or not. It doesn't mean that we're going to get it right all the time. But if we're waiting on data, if we're still inside of our own Globex price action throughout the intraday after the bell rings at 9:30, then you've got a pretty good idea we're going to stay range bound. So if you take yesterday for an example, we stayed inside of the Globex range most of the day. We wicked out just a little bit across those highs before we came back in, but otherwise we stayed inside of our own Globex range. Same thing with Tuesday. When we expanded to the downside and started to come back up, that was the end of it right there. We had a pretty good idea we weren't going to go any lower, and we were pretty certain we weren't going to run out through the top either. So we set our range and we had the rest of the day once we did that V bottom. When we've got a market waiting on data, waiting on an event like OPEX, and we're stuck in this hurry up and wait mode until we leave the range, you have to believe we're not going to leave the range. We're going to just stay here. So keep your eye on the news. Doesn't hurt to watch the dollar, bonds, yields, treasury, gold, precious metals, whatever. Look around at whatever you want. But as long as we're still inside the previous day's range, then got nothing but the previous day's range. That's still our expectation for right now. So the ADR is still 1%. That's about 60 points. We could move 30 points higher, 30 points lower, and that would be our 60-point range. That would still only get us to Tuesday's low. We could see the ADR half down here at 59.88. That red line, that's basically Tuesday's low. If we look for the upside line, we would get a breakout of Tuesday's high, but it lines us up with the 1, 2, 3, 6, a reversal zone, and it lines us up with 60.50, which is an options level. So again, a reversal zone. We know if and when price breaks out, it's got to make it through liquidity, and then we get opposite candle color. So even if we do break Tuesday's high or Tuesday's low today, we've already got our reversal zones where we're expected to come back in. We're expected to hold the line and get into the end of the week. That's what we want to focus on. OPEX, keeping these gains that we took from last week and just maintaining everything into the new week. Into the new week, we won't have this restriction around us, all this money flow on each side. And we should be able to expand either up or down and move out of this zone. But we've got to get out of that range first. The channel today is a little wider than yesterday. It's still relatively narrow, but it is wider, higher than yesterday, and price opened above it. Both of those are considered bullish behaviors. But no matter what this channel says, until we get out of this range, it's hard to believe that we're going to do anything else other than stay in this range. And we have no reason to expect that we're going to leave until we're done with OPEX. Now, because of PPI today, and with Powell speaking today, if they start to get any hint that we're not going to cut in December, the markets are going to have to start to unwind that cut that they've already priced into the market. And that could definitely get us to leave the range with or without OPEX on the table. Looking at this week's volume profile, you can see how tightly wound we are. Classic D shape with the point of control right now where we are, 60.25. So if we can get through it, we've still got these peaks, that 60.32 cog line area to deal with. Highly unlikely we're going to get through that. That's Tuesday's high. But even if we do, we've got Monday's high to deal with, 60.50 major options level, and we come right back in again. A break to the downside, getting below Tuesday's low, that gets us into that air pocket and really starts to expand the opportunity to the downside. Those levels aren't showing up. There we go. Call wall still in the same spot. Volatility trigger, 0 gamma. The volatility trigger seems like it's a little bit closer. I'd have to check the notes to validate that, but it seems like it's closer. Still have a big drop into 0 gamma. Got all the moving averages underneath us. And then a long ways off, the 10-week and the put wall, which still hasn't moved yet. I still say the lack of that put wall being rolled up really takes any sort of bearish bias off the table. If they were lining up to get short, we would see that put wall move. And that doesn't mean that we can't get short, just that they're not lining up for a short, or we would see it move. The air pocket really shows up on this chart, this time frame. So you kind of see that structure we're working with. If that breaks, we've got this air pocket to deal with. No expectation that the point of control is going to move anytime soon, no matter what we see price do anytime soon, right? If we came back down to this lower level around that 750 area, then it's possible we could start to rebuild some volume down here, maybe hit an iceberg or something, and we could bring that point of control down. Otherwise, we would have to stay in a new spot if we leave this range. We'd have to go to a new spot, stay there enough, build out enough volume to move that profile, and I don't see it happening anytime soon. So if we get above it, we'll have this structure underneath this. If we finally break the range to the downside, we're going to have it over our head as a resistance. As long as we stay in this zone, it's going to act like a magnet. We see today's profile, we really got a lot of that volume right across the initial balance. And then we reaffirmed it when we got back up into that level after Europe opened. So we managed to break the Asian high, but only to set a new high right up into the liquidity zone, right? So if we was just to put a fib on it, it ran right up into the 111, got into liquidity and stalled out there. We are done with this VPOC. We hit it yesterday. We don't have a new one to build, so we're done with that level. We got some below us, but we don't have any overhead. Looking at the 10-day, we're at 0.93% above the 10-day. So we're holding the line. We can see price just chopping sideways, and yet the 10 is getting closer to us because we're getting a correction in time. We don't need to fall back to the 10. We can just sit tight and let the 10 come to us. So we're not overbought. We're not overextended on the daily. And looking at the week, we're 3% above the 10-week moving average. That's a really good spot to be in. We're not overbought. We're not overextended. It doesn't owe us any sort of pullback at this point. We can see the range for the week. We're not challenging either side. And we can go weeks without touching either edge. But the longer we go without moving, the more energy this is building up. And after it builds up enough energy and makes its move, the move is likely to be explosive. It's the whole concept of squeeze, right? That's why we focus a lot on squeeze indicators. So if we had gone 2 or 3 weeks without hitting the edge, we'd be looking for a bigger move, right? We see on this week, we didn't hit the edge. Same with this week, and same with this week, and the same that week. And then finally, we started to break down and we hit the edge, the big move down, and then another big move, and then another big move. So we went from doing nothing to actually getting these big moves again. So market is just in cycles, right? Expansion, contraction, expansion. Well, we're in contraction. We're sideways, building up energy. Once we've built up enough energy, then we'll get a move. It doesn't have to be a downward move. It's just very likely going to be a big move, again, like we had on the last one. It is worth noting that we're setting lower highs every time we come back up this week, right? If we were using OCR style analysis, one candle reversal, OCR, then we would be focused on the idea that we're setting these lower highs and we're setting these higher lows. So we're building into compression, right? Like a big asymmetrical triangle. Typically, when you have wedges and triangles, we don't get into the very peak. It's typically 20 to 25% of the entire thing that we don't get into. If we do get into that zone, it nearly always seems to invalidate the wedge or the triangle. So we're running out of time here if we wanted to focus on it that way. And for OCR style analysis, it's insightful to see that we are tightening the zone, tightening the range, building compression, but I wouldn't try to play it as any sort of a wedge play, not on this time frame anyways. Gold miners, China ADRs, precious metals, all down, and things that are up. Bitcoin still, I heard it was like 91 something. Semiconductors, which if you've seen my crypto list, there's semiconductors in it. Biotech, uranium, they're close to being up enough, but close doesn't count. So we've got the Mag 7, semiconductors, and Bitcoin, and that's it. I mean, if I was going to have a rally, I'd rather rally on that than pot stocks and precious metals. Let's say it that way. So we can continue to see a bullish market out there. It still doesn't mean that the S&P and the NASDAQ is going to break out, leave the range, and actually travel somewhere before the end of the week. We just have too much structure around us. There's a lot of economic events today between Fed speakers, PPI, stuff coming out of Europe all day long, Bank of England later tonight. There's just a lot of things going on today. So you want to continue to watch the clock. Keep your eye on the options flow. See if they're rolling those call walls or put walls. But if they're not moving that money that's got us trapped in this range, then we're not going to leave the range. We're going to wait on data. And that's going to be Friday's options expiration. We do have some auctions today too. That could help a little bit just to give us some moves off of the lows or off of the highs. And there is a difference in the trading on a day-to-day basis between a range day and a sideways day. On range days, we get explosive, decisive moves from the edges, right? Really nice reversals, really clean, aggressive money flow and trading activity from one edge to the other. A sideways day is one of those choppy, lingering plays where it just meanders around all over the place without really giving any clear guidance or signals. And it doesn't reach the edges. It stalls in the middles, reverses, and goes back the other way. It's just really choppy, nasty price action. So range is great. Sideways, not so hot, right? The longer we stay in this range that we have, the more we're going to get into that sideways price action where it just gets more and more nasty. But also the more we're building up energy for the move. So if you was to turn on something like the RSI Laguerre, you could see how we're building up more and more and more of that energy. The 10-year is kind of a big deal. So keep your eye on the clock for 11 o'clock. Other than that, the rest of these are all up in the front end. So you could look at something like the IRX. To see if the dollar can go ahead and get through that 107 and expand. We could get a reaction out of market if the dollar gets out of control. It's already higher than, I think a lot of analysts would like to see, but it did reject at that 107. So if we get above that and really begin to expand like we did yesterday in the regular trading session, we see those kind of moves above 107. That might be enough to spark the market and get us out of this range. And that's the idea, right? If we're going to leave this range, it's going to be because of something. It won't be because of what you're looking at in the candles, right? There won't be some head and shoulders wedge, double bottom, tweezer top. None of that stuff is going to get us out of this range. It's going to have to come from something else. Bonds, the dollar, Forex markets, something. With the VIX this low too, tagging that 14.5. Keep our eye on that today. See if it starts to turn around and go back up. As long as it stays below 18, I don't think we're going to see much of a change in the markets. But if we get above 18, we could see a dynamic shift in the way that the ES and the NASDAQ are moving. That's what I got for you guys. Watch the clock. Be careful. Be safe. I'll see y'all tomorrow.